On today's episode of the Cryptoverse, CoinDesk has published their State of the Blockchain report for the second quarter 2017, and Tether is still somewhat lacking in its publicly available audit reports. All of that and a mini market roundup on today's episode of the Cryptoverse, so stay tuned for that. Hi there guys, welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies and blockchains. I am your host, Chris Coney, the founder of Cryptoversity, the online school where you can learn about Bitcoin, cryptocurrencies and blockchains. Find out more about that at cryptoversity.com. So let's get into the market roundup courtesy of coinmarketcap.com. The recovery from the major crash continues to continue. How strange. So let's go to the biggest winner of the day. It's Hcash, H-shares. Yesterday, when I looked at this around about 10 or 11 p.m. GMT, one of my patrons like, look, Hcash is up 99%. But obviously, I look at it on the same time every day. So let's look at it at this snapshot. Hcash, H-shares is up 57.16%. And that's quite a lot for something in the top 20. It's now got a market cap of $514.9 million. Puts it in 18th place. And a individual coin is worth $15.32. Biggest loser is IOTA. Now, I'm not going to cover this on the news today, but I did see lots of tweets going out about a security flaw being found in IOTA. So that may be the explanation as to why IOTA has dropped 10.05% in value. That's pure speculation on my part. It just so happened that IOTA is the biggest loser, and I saw that news, so my brain, the brain is kind of, it likes to spot patterns in things. That's why we sometimes see things that aren't really there. But that's where my mind went. You can take that for what you will. Anyway, IOTA is sat there 9th most capitalized coin, 1.75 billion market cap. So 63 cents will buy you a million IOTAs right now. And $30 million of IOTA has been traded in the last 24 hours. Now, Quantum has won 2 awards today. It's won the most traded altcoin award with almost $302 million of trading volume in the last 24 hours. That trumps all the other altcoins. And also, it gets the honorable mention. It's the second biggest gainer in the top 20. It's gained 44.2%, and that leaves it in 13th place with a $940 million market cap. The Quantum is trading at $15.94. So, I mean, it's not far off Hcash, but doesn't really make a difference because they have wildly different coin supply. So that's a stupid observation on my part. Anyway, Crazy Coin Award, we have to go all the way down to some of the smaller cap coins. Not as crazy as I was expecting. Normally, the Crazy Coin Award in the small cap area is usually bigger than the biggest winner in the top 20. And it's gas, the Neo gas, which has a separate currency, is up 40% today. Down there in 54th place with a $127 million market cap and $15.24 coin price. So a little bit disappointing for the Crazy Coin Award. Not as crazy as we might like. You remember last week when Rise went up like a couple of 100% or something in a day. So I like to do that for a bit of fun. Alrighty then. That's all I've got for the market roundup today. Let's get into the news stories. Number 1, CoinDesk has published their State of the Blockchain report for the second quarter of 2017. So let me show you this on CoinDesk's website. There we jolly well go. So CoinDesk actually emailed me about this yesterday, and I immediately put it into the show schedule because the sooner you get hold of this report, the better, really. And by that I mean this kind of thing starts going out of date as soon as it's published. So any opportunities that we can find in this data, they have a lifespan, so better sooner rather than later, which is a general rule with cryptocurrency information, right? Now, the report itself is 115 pages long. That might sound like a lot, but they've done a great job in the design of this report. It's charts, it's well laid out data, and I'm not going to go through the report itself because it's so huge, but I'll just pick out one page to talk about briefly, which is page 12, and you'll see what I mean by the design. Let me just skip back up. Look, when they display the charts and even when they display text, they box it out and things like that. But anyway, page 12 is the one I want to talk about. So this arranges various crypto and non-crypto entities, and it arranges them by market cap. So for example, it lists, it's kind of it says for context, Western Union's market cap is approximately 10 billion. Ethereum's market cap is approximately 30 billion, according to this report, which today, if we actually verify that, Ethereum's market cap is 31 billion, so near enough. It says Bitcoin's market cap is 40 billion. Well, at time of the report, it might have been, but right now, Bitcoin's market cap is 76 billion. And then it says all cryptocurrencies combined 100 billion. Again, this is a snapshot from the end of the second quarter. So that actually is a wow factor right there. We've gone up significantly since then. Today's overall cryptocurrency market cap is 164 billion. So it's already, what, 64% higher than what this report is saying. And also, if you look at this and you see Bitcoin at 40 billion and then Visa at a 200 billion market cap, you think, it's got a long way to go. But now we know, as of today, Bitcoin's market cap is 76 billion. So it's almost approaching half the market cap of Visa. And it's still a long way from the market cap of the likes of gold, which is listed here at 7 trillion. So, I mean, that's both good and bad. It's good because it shows that the potential of Bitcoin is as huge as gold. So it's got a lot of growth to go yet. So that's a positive thing, but it's still infinitesimal by comparison. So links to the CoinDesk resources will be in the video description as always. I would suggest get yourself a copy of this report, get yourself an official Cryptoverse mug, which is also linked in the video description, and then just take a bit of time to flick through this report and see what pops out at you, right? Find your favorite page in the report and let us all know in the comments below. I've just shown you one of my favorite pages, page 12, and so share with me and all the rest of the community in the comments which page you find the most interesting. So that's all I've got to say about the CoinDesk report. Next story I picked out, Tether is still somewhat lacking in its publicly available audits. This was one of the news stories that I had in my, my news pool. When I'm constantly scouring the news, all of the news stories that I think, I really want to talk about that, those ones that don't make it into the show because there's just not enough space, they go into my news pool. So every day when I'm deciding what to put in the video, I go to that, I look at the news. There's obviously new stuff coming out all the time. And sometimes I'll pick something out of the news pool, which is a historical story, which I didn't get to. This is one of them. So this is only 2 days old, mind you. This comes from the Cointelegraph. The David Dinkins here has entitled this article, Tether It Really Isn't a Scam, Company Promises. I think that's a bit harsh. I'm not going to be as harsh as that, actually, although I hope I'm not going to be that harsh. So just a quick setup here, as to anyone who doesn't know what Tether is. It's a cryptocurrency. It goes by the abbreviation of USDT, USD Tether, because it's designed so that every token is pegged to be worth $1 at all times, right? And this is accomplished by a company, the Tether Corporation that created the token. They take dollars into their bank account, they take your dollars into their bank account, and then they issue you with the same number of USDT tokens, right? And you can then go about buying and selling cryptocurrencies using the Tether token as if it was a US dollar, except you do it in a frictionless way. And then whenever you want to redeem those USDT tokens, you surrender them and then they give you the US dollars back out of their bank account, right? So pretty simple idea. So that's how USDT is able to maintain a value of $1. Everyone who accepts a Tether token as a payment or as a trade, they know it's worth $1 because it's worth $1 of value that you can withdraw from the Tether Corporation's bank account whenever you want to cash it in. Now, the obvious concern there straight away is that you want to make sure that Tether Corporation actually does have $1 in their bank account for every Tether token that exists, right? That's kind of the whole point. When I just said a minute ago, I was going to say fractional reserve, which is the problem. We don't want a fractional reserve system. We want to make sure that there is $1 for every single Tether token. We don't want 10 Tether tokens and only $1 backing it. Otherwise, that's called the fiat money system. We don't want that at all. That's what we're trying to get away from. And just by the way, Tether makes money by charging fees when you deposit or withdraw dollars from their system. So well, as long as you transact in USDT and Tether, then those transactions are free. It's just when you come in or out of the system that there is a fee. So that's how the Tether Corporation makes money. They've got to, otherwise they can't operate. So back to the auditing then, right? It says on the Tether website, let's display the Tether website. It says here on the Tether website, transparent, right? It says all their reserves are audited. They say they publish their reserves and their holdings daily, which means nothing really because it's just words. They also say they are subject to frequent professional auditing. Okay. So let's switch back to the CoinDesk article here. They say this thing about they're frequently audited, and that's actually where the rub is. So in the article here, it says, in red, access to banking has been significantly curtailed. This began earlier in 2017 when one of their, Tether's, corresponding banks, Wells Fargo, began refusing their incoming and outgoing wire transfers. Well, that's bad, right? So that's one concern straight off the bat. But actually, there's another one here. Back to the article again, sorry. In the orange, it says here, there's one of the controversies coming out of their terms and conditions says, there's no contractual right or other right or legal claim against us to redeem or exchange your tethers for money. It says, we do not guarantee any right of redemption or exchange of tethers by us for money. There's also no guarantee against losses when you buy, trade, sell, or transfer tethers. Oh, really? Well, that's pretty bad. It sounds bad. The article also says that the last audit that Tether had on their bank reserves was March of 2017. But also it says, the article says, since then, several 100 million new Tether tokens have been issued into circulation. So there's this combination of like banking problems, like out-of-date audits, and then the increased number of tokens that have been issued on the market. When you put all those two or three things together, they don't really mix very well, do they? Now, when you go through to the actual transparency page on their website, all you get is this, a table of numbers on a web page, right? This is just a basic web page with some text on it. And that's what they're putting as their current reserves. And I guess this is the thing they're updating on a daily basis. And this is public, right? Now, there's no way to categorically prove the reserves of any traditional asset like this, unfortunately. Not like you can with crypto, but you can go a long way to giving people confidence that you do have the right amount of reserves. For example, a good role model in this regard to me would be Vaultoro, right? I'm always talking about Vaultoro. It's a service that I personally use, and it's a service that I recommend. Not only because of the way they do business, but also Josh Shigala. I know the guy. I think he's got integrity. So I reconcile those two things together. I look at the behavior of the company, look at the behavior of the leadership, put those two together, and that's what gives me confidence in them. Anyway, they have this same kind of public transparency page, which is right here. If I click on transparency, which lists a similar thing. They developed what they called the Glass Books Protocol, which, like the image suggests, it's like a transparent book with all of the books on it, right? So they have this kind of publicly auditable thing as well. And Vaultoro is obviously showing the reserves of gold and Bitcoin. But they go further than that, right? If I log into my account, you'll see what happens. I've actually already done that on the other tab. When you log into your account and then go to the audit section, you get even deeper information. There's this thing here that says Vaultoro Holdings by Pro Autumn Switzerland. And if you click on this little icon, it pops up this letter, which is a scanned letter from Pro Autumn that shows, well, this is actually in German because that's where they're based, but it's dated the 28th of August 2017. So that's about a week old, right? That's a lot better than March, right? Which is the last time that Tether were, published an audit. Now, Tether do say like the reason they're having trouble with audits is because they were banking in Thailand and their Thailand bank accounts got, they had trouble with them, and now they're moving banks, and now they've instructed someone in New York, and yada, yada, yada. So they're coming out with a bunch of reasons why they haven't published a more up-to-date audit, but it's just not good enough because, purely because people cannot verify it for themselves, you need to go the extra 2 miles, not just the extra mile, the extra 2 miles to give people confidence that that you do have those reserves, right? So this video may come across as being quite harsh on Tether, and if so, that's not my intention at all. What Tether are trying to do is hard because they're standing in the most perilous position in this world. You know, they're smack dab in between cryptocurrency and fiat currencies. It's almost like they're trying to make a business out of mixing oil and water, yeah? But perhaps, I mean, crypto and fiat aren't as incompatible as oil and water, but the mainstream banks don't make it very easy for crypto and fiat to interoperate, do they? And when companies like Tether, who I think is a brilliant idea, it's a great innovation, right? Creating these tokens that represent a US dollar in a bank account, and had the banks that they were using not caused them trouble, it would have been okay. You know, if they have consistency in their banking, they could have done the audits and so on. So I don't think it's really Tether's fault. It's just that the type of business they're trying to do is just very, very difficult. The final thing I will say while researching this video was that I did create a Tether account to see if they had a Voltoro style audit inside the customer dashboard, because the only thing I was looking at so far was the public page. But when I signed up for an account, logged in, went to the transparency page inside the customer dashboard, I just found myself right back on the same page, which is that basic table of data that we saw, which you can access from the front end of the website anyway. In conclusion then, in an ever-increasing crypto world, where everything is provable and verifiable by the individual, traditional companies with traditional assets are going to have to work extra hard on things like trust and transparency. And I will say, for the record, that the KEXCoin team are acutely aware of this. Alright guys, thanks very much for joining me today. If you liked this episode, go ahead and hit that like button. And if you're new around here, get subscribed. And if you would like access to my very best material, such as my structured online courses that will teach you things like how to make and save money with Bitcoin, check out cryptoversity.com. Okay guys, that's all for today. I'll be back on Monday with another episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.